Let's bring in Beth Kindig, who's a lead tech analyst at IO Fund. Beth, great to have you with us. So let's start off with the good. When it comes to Meta, it was sort of twofold. The concerns was whether advertising was going to hold up and therefore continue to fund the spending in AI, and also how that investment and development in AI was going. Were you encouraged on both of those fronts, like the markets seem to be?
Yes, and particularly with Meta, what was good to see was the very large earnings beat. It was a 23% beat on the bottom line. That piece was sizable. I mean, this was a huge surprise. When it comes to the ads, we've seen Meta have bigger beats. In fact, last year, Meta's revenue growth was far higher than the revenue growth we're seeing today.
Some of the concerns over spending in Asia, for example, do you think we're at the cusp of not quite seeing the impact of the trade war, tariffs, and some of the broader sentiment and confidence concerns? Or are we seeing sort of the, I guess, idiosyncratic ability of some of these tech businesses to withhold those pressures?
Those questions did come up on the call, and management was a bit vague. They definitely pointed to a pullback from China. They pointed to lower election spending, of course. What analysts really wanted to hear was that discretionary spending. They specifically asked about auto, and management did not answer to it. However, from my perspective, like I said, last year we were seeing revenue growth in the 20% range for Meta. We are decelerating every quarter right now, and the Q2 guide suggests an even further deceleration, and that piece would point towards some softening.
Beth, when it comes to some of the other big earnings that we've been watching, Microsoft was another one, obviously a favourable reaction with those markets as well. The cloud business continues to look pretty resilient.
Oh, yes, absolutely. This was a major surprise this evening in a positive way. Azure is accelerating. 16 points is coming from AI versus 13 points. What I would point out about that is that means half of Azure is coming from AI. Analysts were lowering Azure estimates going into this earnings report. So Microsoft really came up big tonight, specifically showing us that AI is starting to move the needle, specifically around cloud spend.
Are the concerns over cheaper AI models coming from China, for example, that weighed on the sector, gone now?
My stance has been the democratization of AI. The more AI that you have in the hands of more people, whether that's at the developer level, consumer level, enterprise level, the better for all participants. When AI is this expensive, it keeps it reserved only for big tech. That has a very limited addressable market. We want AI in everyone's hands as cheaply as possible so that it can scale. And we are seeing no evidence of cheaper models from China impacting AI spend right now in the United States.
Beth, we're still trying to gauge where the Trump administration will go with those exemptions when it comes to semiconductors on tariffs. What are your expectations right now of what eventually that could look like?
I believe the United States will empower AI to continue full steam ahead, meaning I would expect there to be semiconductor exemptions specifically around AI design companies, components, the fabs, making sure anything built in Taiwan would be exempted, things of those nature.
Are you seeing any indications of supply chain disruptions right now? We are going to get, of course, Apple's results as well. How big of a risk is this dependence and really interlinkage with China at this point?
With supply chains being globalized, as everyone is fully aware, and now needing to be localized, we will see supply chain disruptions. Will they show up in this quarter? Probably not. Specifically, there will need to be a sourcing change. There will be a lot of disruptions around sourcing. Apple shipped 600 tons of iPhones ahead of the tariffs. over time, there will need to be sourcing changes. And then, of course, who's going to absorb the impact of the tariffs? The consumer is too weak. It's idealistic to think the consumer would absorb that. Therefore, I would look for impact in margins.
Where do we go when it comes to Tesla, right? Because that continues to be the big drag when it comes to Mag 7.
When I think of Tesla, I think of an interest rate story. I also think of a company in the crosshairs of a weak consumer, losing China as a customer. Just, this company is foreshadowing what can potentially happen when you lose China as a customer, when you have a weak consumer, when you have these interest rates elevated. I don't think it's a Tesla-specific problem. I foresee some of the issues Tesla faces becoming more widespread the longer that tariffs are in place.
Beth Kindig, lead tech analyst at IO Fund.